Circular flow of income. It's the unending flow of income, okay, from one sector to the other. Let us look what are the phases of this unending flow of income. First being phase of production, next phase of income generation, next phase of expenditure. So, okay, let us look at all of them. Here, phase of production, okay. So, in the phase of production, value addition is done by the producing sector. They produce goods and services, and using the factors of production from the household, that means land, labor, capital, and entrepreneur, plus non-factor inputs, that's the raw material. Using these both, they produce goods and services. Why? For the satisfaction of human wants, okay. And next, there's no end to human wants, so because of that, there's even no end to the factors of product to the process of production, and so the process of production goes on. This is the process of production. Now, because they also take help of the factors of production from household during the process of production, so now they pay the household in form of factor services, that is income generation of the phase of distribution, in which the households get the factor payment, that is rent, wages, interest, and profit. So this is the phase of income generation. Now the household got income, and now they have so many wants. We saw that they have so many things to satisfy their wants. So now they spend it again, that is called expenditure. So now that's called the phase of expenditure or disposition. So whatever income they've earned, they spend it on the purchase of goods and services that's produced by the producing sector, okay. And the producer and they spend it in the form of consumption expenditure and investment expenditure, okay. Now because they spend it, now if we buy something, then its demand is created. So because they buy it, again demand is created, and because the demand is created, so again the producing sector produces things, and again income generation happens, and again they spend, and again the producing sector produces, okay. You do not get. Okay, see, the producing sector, they produce things, after which they pay the factor services entirely to people, and after which the people spend the factor services to fulfill their needs and wants, which creates demands in the market, which again leads to production, and this cycle just keeps going on, okay, unendingly. So, and here we just take an assumption that the amount of value that we have made the production of is actually equal to the amount of income that's generated, which means that's equal to the factor payment, and that is exactly equal to the amount of expenditure done. So we mean how much our goods is produced, that much our income is given, and that much ever only they spend, okay. So what are the assumptions that we have taken here? First is there are only two sectors, that's household and the producer. That's why we're not taking into fact any tax thing or things like that, okay. Now next we consider there are no savings, that's why they're spending all that they're getting, all the factor payments that they're getting, all the households are spending it, so there's no savings. Next, it's a closed economy, there are no exports and imports going on, okay. We've assumed during this circular flow of income. And next is there's no government to interfere in this economy. So these four are the assumptions of circular flow of income. Now next, let us look at the observation that we have made. We made the observation that the factor payment is equal to the value addition done, and also the total production done is equal to the total expenditure done. Hence this is called the triplet identity, which means the amount of production is equal to the amount of income generated, that is equal to expenditure, okay. Now, what is the significance of circular flow of income? It helps us to estimate the national income of a nation. What is the national income of a nation? It's equal to the sum total of factor income that's earned, or is it equal to the market value of all the goods and services that are produced in an economy during an accounting year? And it is also equal to the sum total of expenditure on goods and services. So we saw that these three amounts are equal by our assumption of circular flow of income. So hence this three, any one of them we take, then we'll get to know the national income of the year, okay, national income of our nation. Next, it also helps us to get the knowledge of intersectoral dependence. For example, how consumers are dependent on producers, how producers are dependent on consumers. We also get to know this by circular flow of income. So that was it for second chapter. Thank you.